Welcome to general deduction class. Last time we were doing gross income, and then today we'll continue doing the general deduction. So the learning outcome for today, I want you to list the requirement for general deduction. We'll go through the general deduction definition and the requirement. And you must apply the formula to a practical situation. And you need to discuss whether an expenditure will be deductible according to general deduction formula, and also explain the workings of section 23. So we'll do section 11A and combined with section 23. So the background of general deduction is that allowable deduction represents the deduction of expense incurred by the taxpayer from carrying a trade, which in terms of Income Tax Act may qualify as a deduction. So the allowable deduction are deducted from income in the income tax framework. We did the income tax. I did show you the income tax framework, so we are taking it from there. So the result of this calculation, income less deductible, is taxable income. So in terms of section 11A of the income tax, they make provision for the general deduction formula according to which most of the operating expenses, expense, which one qualify as a deduction and which one are not. Most of the operating expense incurred by the taxpayer during the operational of may qualify as allowable deduction. So let's start with the general deduction formula. So today what we're going to do, we are going to do the general deduction formula requirement, the definition of general deduction formula, and section 23. And we'll do the negative and positive test for that. We'll see later. So in terms of section 11 of the income tax, the general deduction formula read as follows. For the purpose of determining the taxable income derived by any person from carrying of a trade, they shall be allowed as a deduction from income of such person so derived. So in terms of section 11A, expenditure and losses actually incurred in production of income, provided that expenditure and losses are of capital nature, read together with section 23. And the other definition is in terms of section 11G. Any money claimed as deduction from income derived from the trade to extent to which such money were laid out to the expended for the purpose of trade. So what I need you to know from this slide is the definition. The definition, you'll find it in the income tax in under section 11. So it is the definition of general deduction formula, which read with section 23G and then section 11A. So according to section 11A, for the expense to qualify as a deduction, there must be expenditure or losses actually incurred in production of income, provided that such expenditure and losses are not of capital nature. This is the requirement of general deduction formula. So let's talk about carrying of a trade. What is carrying of a trade? One of the requirements of general deduction formula, as I explained in terms of section 11A, is that the taxpayer must be carrying on a trade. What is carrying on a trade? So in terms of section 11G, carrying of a trade is defined as for any expenses to be deductible in terms of section 11. The taxpayer must be carrying of a trade. The trade is very, very important. The taxpayer must be carrying on a trade in order to qualify. So definition of a trade in terms of section 11 includes every profession, trade, business, employment, calling, operational or venture, including letting of any property. So the definition of a trade means that the taxpayer must be in every profession or trade or business, employment or calling, or occupation or venture, including letting of a property. Also, letting of property qualify as a trade. It's clear from the definition that it has a very wide meaning and includes earning of a salary. So under the definition, we have employment. So also earning of a salary will be included in the definition. Include rental, we said include letting of any property. So it will be rental. But however, it excludes the interest and dividends income. Remember, the interest and dividends income, we'll talk about them later on the other slide. They are not included in the carrying of a trade. They don't form part of carrying of a trade. They are not in the definition of carrying of a trade. So we're still talking about carrying on a trade. It's important to be aware that definition of a trade is a very wide, extending beyond running a business. It include activities such as carrying profession as well as being employed. So for the definition of a trade also, you must be careful of the definition of a trade because the definition also includes every profession. So all the profession as well as employed will be defined as carrying of a trade. So it's also important to know that passive investment activities are not included in the trade. So we talked about it. I said interest and dividends will not form part of a trade. This means that where expenses are incurred in any investment income, they will not be deducted. Where there is expense in incur in any investment, you will not qualify to deduct expense under general deduction formula. So passive investment generate returns such as interest and dividends. So dividends and interest will not qualify as carrying on a trade. So in terms of Section 11A of Income Tax Act, will cover the trade related to expense and some specific expenses. In order for any expenses to be deductible under Section 11A, the taxpayer must carry a trade. Where the taxpayer, we just learned about the trade definition, so the taxpayer must carry trade. So where the taxpayer carry one or more than trade, all the income and losses of each are usually added together to calculate the taxable income. So for the concept of carrying trade, where there is no profit motive, as indicated in the case of Becker versus CIR. So you can go through the case study which is related to carrying of a trade is this one. So you can go through the case study to identify what is the meaning of carrying of a trade. So for the purpose of this module, you need to know what is carrying of a trade. The definition of carrying of a trade is very important. And you also need to know which qualify as a carrying of a trade, which will be the profession, the trade, the business employment, occupation, and including letting of any property. And what is excluded, it will be the interest and dividends income. And also the passive investment, which are interest and dividends, do not qualify as carrying of a trade according to the definition that we just read now. And then the case that is related to the carrying of a trade is this case that is indicated here, the Becker trade case that you can go through it. So we're still on carrying of a trade. If a taxpayer is not carrying on a trade as defined according to the definition of a trade, he or she will not be allowed. You will not be allowed to deduct general expenses from income received. So the general deduction formula just saying you are allowed to deduct general expenses from income received, but the general expenses need to qualify as general deduction formula according to the definition of general deduction formula and the requirement of general deduction formula. So a person who speculates in shares in carrying of a trade, but a person who incurs expenses relating to the hobby will not be carrying of a trade. As employment is defined as a trade, remember employment from the definition qualify as a trade. A person earning a salary may deduct expenses of a general nature in terms of Section 11A of the income tax requirement. So in the requirement of Section 11A, we did them. The requirement of Section A is expenditure and losses actually incurred in production of income, provided that such expenditure and losses are of capital nature. So this are will be the requirement of Section 11A. So, however, the 23, in terms of Section 23, will limit the deduction available to salaried individual. So, employment, as we saw, that is under the trade. So, is defined as a trade. A person earning salary may deduct expenses in terms of Section 11A requirement that we just spoke about. However, even though the person qualified, employment is qualified as a trade, and the person qualified to deduct under general deduction formula in terms of Section 11A, there will be a limitation under Section 23M. So in terms of Section 23, the general deduction formula in terms of Section 11 and Section 23A. So we have Section 11A, which qualify the taxpayer to deduct the general expenses, a person earning a salary to deduct. But we have Section 23, which limit the deduction. So now we'll talk about, we are detailing the requirement. So the general deduction formula in terms of Section 11A, we have the positive and the negative test. So now we will we'll talk about the positive before we go to the negative. So in terms of Section 11A, we have the positive test, simply that expenditure and losses actually incurred, meaning that they have been paid or that a liability obligation to pay exists. So that has arisen during the year of assessment that has been incurred in the production of income. So meaning that the income producing the action that gave rise to the expenditure was closely connected to the income producing activities. So later we'll talk about the other requirement, which is capital in nature. We will talk about the production of income and capital in nature. So shall be allowed as a deduction provided that a trade is carried on by the taxpayer and expenditure was laid out or expended for the purpose of trade, and income is to be derived from such trade. So under Section 11A, right, with Section 23 of the Income Tax Act, we have the positive test, which under the positive test, we need to test if expenditure and losses were actually incurred and it was during the year of assessment and it has been incurred in production of income, which allowed as a deduction, provided that we have a provision there, provided that a trade is carried on by a taxpayer and the expenditure was laid out in the expense of such trade, so to be derived from such trade. So we have the positive test and the negative test, and the negative test under Section 11A, right, with Section 23. So under Section 23G of the income tax, will have the negative test of the Act should be adhered to when applying the general deduction formula. So we have the positive that the taxpayer must adhere to. We also have the negative test under Section 23G of the income tax. So under Section 23 of the income tax, the Act should be, this negative test should be complied with when applying the general deduction formula. This section prohibits the deduction. So this section prohibits the deduction of any money from income derived from trade to extent that such money were not laid out in the expended for the purpose of trade, meaning it's not closely connected to the trade that was carried on. We saw the negative, the positive test that there must be a connection between the income incurred and the expenses. So under the negative test, we see that there is a prohibition, there's a prohibition of the deduction where any money was not closely linked to the purpose of trade. So the general deduction formula comprises of two elements, namely, we have the positive and the negative. We talked about the positive, which the expense must comply with. And we also talked about the negative now, that may qualify. The negative prohibit the deduction of being allowable deduction. So we have the negative and the positive under section 23. Under section 23G, the negative disqualify, prohibit the deduction from being allowed. And also under section 23, we have the positive, which indicate the expenses that must be complied with when allowing deduction. So these two elements must always be applied in conjunction with each other to establish the deductible expenditure. So under these two slides, we have the negative and the positive under section 11. So section 11A talks about the requirement of general deduction formula. So under section 23, we have the positive and the negative. The negative prohibit certain deduction, and the positive, the negative we have the negative and the positive. The positive means that the taxpayer must comply with the certain element when deducting the expenses, and the negative may disqualify, prohibit certain deduction from being allowed as a deduction. So for the purpose of this module, you need to test if the deduction is positive or negative, and the two elements must always be complied in conjunction with each other to establish the deductible of expenses. So for example, let's do this example. So for example, the stock loss suffered by we have an enterprise that suffered a stock loss, which subsequently compensated by an insurance company. So the enterprise suffered a loss, but it was compensated by insurance company. He claimed from the insurance. So may in all respect be deductible according to general deduction formula is the loss. Remember, one of the requirements is the loss or expenses under section 11A, the requirement. So there is a loss. So however, this is the positive test, is how you apply the positive and the negative test. This is the positive test. Then under section 23C, however, it will be disqualified as a deduction since the loss has been recovered under insurance contract negative test. So we have the positive, where is a loss, it qualifies as a deduction, but under the negative, we have prohibition because the loss was already being paid by the insurance. So the general deduction formula is more applicable to taxpayers who own a business. This is because the restriction placed on salary in terms of salaried taxpayer. Remember, we talked about the trade. We said the salary taxpayer also qualified as for deduction under section 11. Under the trade, the employment is also one of the requirements. So there is a restriction placed on the salaried taxpayer in terms of section 23M, which causes in person who earn remuneration the form of only salaries, fringe benefits, and allowance to most cases not be able to deduct expenditure in terms of general deduction formula. So we have the situation where the salaried taxpayer qualify for deduction. but Section 23 limit that deduction. So expenditure and losses. One of the requirements is carrying of a trade. We just talked about carrying of a trade, and now we'll go to expenditure and losses. There's no significant difference between the two concepts. So the definition is saying, in order to qualify, one of the requirements is expenditure and losses. So before we can go to expenditure and losses, do you have any question on the requirement, on the carrying of the trade, especially the employment and the negative and the positive test? Will you be able to apply the negative and the positive before we can go to the next requirement, which is expenditure and losses? Let's discuss it and see if we understand it before we can move on.
Hi, Maite. Uh,
Yes.
so from what I gathered, the positive test would be the loss that has been incurred, right? And
Yes.
then the negative test would be, for the example that you gave, that loss has been recovered. In this example, it's if the insurance paid for that loss. That's
Yes. Yes.
that's
You're
what
right there.
I got with. But is there another instance where you can apply the positive and the negative test if it's not like an insurance, for example? Any other example?
Mm. Yeah, you can. This is just an example. So you can, because under negative test, under the positive test, it will qualify. If it meets all these requirements, it will qualify for positive test. But if after meeting the requirement, you see with the insurance, after meeting the requirement, we have the money, we have this requirement, so it will not qualify. So under we have positive and negative, but if the negative will disqualify the deduction. I don't have any other example, but I think the one for insurance is sufficient. But at the end of the lecture, we'll be able to go through an example with the
Okay, no.
calculation.
Oh, okay, no, I understand. So if there's no negative test, then you just deduct. It's just a matter to say if
Yes,
the question comes, I must just determine both positive
you
test
must.
and negative. And if it's not there, if the negative test is not there and the positive is there, and we meet the other requirements, then it's a deduction.
Yes, yes.
Okay. Okay, no, I understand.
Thank
Thanks.
you for that. So the other requirement is expenditure and losses. Under Section 11, there's no significant difference between the two concepts. An expense is payment in return of goods and services, and a loss, as we see from the insurance, is an expense of involuntary nature, for example, stock that was spent by a fire. So note that deductible expenditure is not restricted to expenditure in cash, but include the outlay of amount in the form other than cash. Therefore, for example, if a shopkeeper offer the asset instead of cash as a payment for new stock, then the market value will be of the asset will be deductible. So, for example, if we have a shopkeeper who offer an asset, he offer asset instead of cash. So the new stock as a payment of a new stock. So he offer an asset instead of cash. Then we will use the market value to determine the value of the stock. So where the taxpayer acquire an asset through inheritance or donation and subsequently use it to pay something, the market value where the asset was through inheritance or deduction or donation, the market value will also be used to determine the value of the asset. So we just talked about the expenditure and losses, and we found out there is an expense. The expense is defined as a payment return for goods. We have the losses, and where we don't have exact amount, we'll use the market value. So the other requirement is actually incurred. So under actually incurred, a taxpayer may deduct expenses that have actually been incurred as amount that are being owed. So the liability for the expense must be unconditional, which means it must be actually incurred. Unconditionally means that it must not depend on some future event happening. Where an event must take place before expenses become payable, the expense will only be deductible for tax purpose in the year in which event take place. So what we are meaning here, the expense must be unconditional. So expense, the other requirement is actually incurred. So there must be no unconditional, the liability and expenses must be unconditional, which means that it must not depend on some future event. So for this actually incurred, you must learn that the expense must be unconditional. This is very important because the event must take place before expenses become payable. And the expense will only be deductible in the year for the purpose of the year in which the event takes place. Remember the year of assessment. The event must take place in the year of assessment. So let's do this example. So at the end of February, which is the end of year of assessment. So actually incurred, as we have learned, I said the expense must be unconditionally and the event must take place in the year of assessment. So on this example, we have employee X that has a contractual agreement to pay employee Y a bonus of 10,000 by the end of March. Employee Y reach the condition is that employee Y must reach a particular sales target. So when you answer this question, remember we are testing the actually incurred. When you test the actually incurred, the expenses must be unconditional. It must not depend on the future. And the second one, the second important thing is that the event must take place before the expense become payable. The expense will only be deducted for the tax for the year in the year of assessment. So on this example, the end of February, the year of assessment, is the event. The event is taking place. The employee X has a contractual obligation to pay employee Y by the end of March. Employee Y, the condition is that employee Y must reach particular sales target. Determine if the bonus will actually be incurred by the end of year of assessment. Before we go to an answer, can anyone discuss this question, the solution before we go to it? I just want to test if you understand year of assessment. Can anyone help us before we go to the answer?
I think it will not be accounted for because it's got a condition on it that they've got to meet a sales target, as well as it'll only be paid in March, which is after the year of assessment.
Yes, yes. Thank you for that. Yes, let's go to the the liability of 100 rand has a condition. Thank you for that. There is a conditional, is conditional at the end of year or at the end of February, year of assessment, because employer cannot be certain that employee will in fact reach the sales target. Therefore, the expense will not have been actually incurred. So we're testing the actually incurred. So it was not actually incurred by the end of your assessment. So the most important thing to test actually incurred, you must have, there must be no condition, and you must also check year of assessment to say that expenses qualify for actually incurred. So let's move to the other requirement. The other requirement is in production of income. In terms of section 11A, we have the requirement. We talked about actually incurred, we talked about expenses and losses, and we talked about the trade. So the other requirement is the is in the production of income in terms of Section 11A of the income tax. So in terms of Section 11A, in production of income means the expenses must have the purpose of producing income. The test deal with whether the expenses must be closely linked to the activities that produce an income that will be taxed. Therefore, there are numerous court decisions that have hinted in terms in the production of income. So for this level, you must also be able to apply. After applying the definition and the requirement, you must also be able to quote the text, the case. So there is a case that deals with in production of income, which is Port Elizabeth Electricity Company versus CIR. Is the case that deals with the, you can read it, you can, for detailed, you can read through the question, the court case, and the summary of the case held that in order to be deductible, expenditure must be so closely connected to the cost of performing income. So in terms of Section 11A, we said that in production of income means that there must be expenses must have the purpose of producing income, and it must be closely linked to the activity that producing income. So here in the court case, they held that in order to be deductible, expenditure must be closely connected to the cost of performing income in operation of the business. That will be reasonable to regard it as part of the cost of performing operation. So in production of income, the most important thing you must know that the expense must be closely linked to the activities that produce the income. And we also have a court that deal with it, and under the court, the court case, they held that expenses must be closely connected. It must be closely linked to the activities. So you must link the requirement of Section 11A under production of income and the court case. So the closely linked, closely connected must be on the answer when you're answering the question. So the other requirement is not of capital nature. So capital nature is not deductible in terms of general deduction formula. Remember, also in the gross income instead of capital nature will not form part of the revenue. It will not form part of the income earning. So we must know how to apply the factor that the court has laid down to assist in deciding whether the amount is of capital nature or revenue nature. Remember, of revenue nature, it will qualify for deduction. Of capital nature, it will not qualify as under general deduction formula. So for this module, you need to know how to apply the factor that court has laid down. So you need to know how to apply the court case. So remember that the result of the factor will give indication whether the amount is of capital nature and not of capital nature. So each case must be decided based on unique circumstances. So what you need to know on this for not of capital nature, you need to know how to apply the general deduction formula. So you must determine whether it's of capital nature or revenue nature. And also you must also know the court case linked to the capital or revenue nature to decide whether this amount qualifies as a deduction. So you must ask yourself before you say is of capital nature or revenue nature, what is the true nature of the transaction? How closely is the expense to the income in operation of income structure? We must ask this question. Does this expense create an asset or advance with enduring benefit? Does the expense relate to fixed or floating capital? Was the expenditure once and for all? What is the nature of the business being carried on? So you must, in order to decide whether this is a revenue or capital in nature, remember the revenue qualify for deduction and the capital in nature doesn't qualify for deduction. So you need to ask yourself the following question: how closely connectedly is the expense to income in an operation? Is it for capital or revenue in nature? So you must ask yourself again, does this expense create asset? Does this expense is a fixed or floating? Is this once or for all? What is the nature of the business? So if the expenses of capital nature, remember, it will not be deducted in terms of Income Tax Act under Section 11A, under the requirement of deduction under Section 11A. But if it's of revenue nature, it will be deducted. So all of the, we're still talking about it out of the expended for the purpose of trade. All of the above must be met for an amount to be deductible. So we have those 5 requirements. I think it's 6 requirements that must be met before we say this expense or losses qualify as a deduction. It must be expense or losses. First of all, there must be a trade. There must be expense or losses actually incurred in production of income, not of capital nature. This requirement must be all be met before amount can be deducted. So Section 23 must then be consulted. So you need to go to Section 23, especially for employment. Remember, employment qualify as deduction under Section 11A, is a trade under, is defined as a trade and also qualify as a deduction under Section 11A. So after the requirements are met, those 5 requirements, you must also check under Section 23. You must also consult Section 23 to see if amount are not allowed because they are listed as prohibited deduction in terms of Section 23. You must also go to Section 23 and see if these amounts are not prohibited. So trade is a term that is defined in the Act, and therefore expenses are only for the purpose of trade will be considered for deduction. So the first requirement for deduction, which is a trade, does also have a definition. Therefore, the expenses that are only for the purpose of trade will be considered for deduction. So it must qualify for trade. This means that where expenses is not for trade purpose, it cannot be deducted from income. So alternatively, where amount is both trade and other purpose, it will be apportioned. So if we have a situation where the amount is qualified as we have amount qualified as a trade and also for other purpose. So you need to apportion between trade and other purpose. So the trade portion of an expense will be deducted for income purposes if it complies with all the requirements. So if we have a situation where there's a 2 purpose, the other one is for trade and the other one is for other purpose, you need to apportion the one for trade and also deduct for income tax, you need to deduct if the trade complies with all the requirements. So I was talking more about prohibited deduction under Section 23. Now we'll talk about Section 23. So certain expense will comply with all the requirements set out in Section 11A. So we have certain expenses which comply with all the requirements of Section 11A of the Income Tax. The Act provides a list of Section 23 of the amount that cannot be deducted. Under Section 23 of the Act, we have the expenses which are not deductible for tax purposes. It cannot be, is prohibited deduction. When we say prohibited, we mean that it cannot be deducted. So the following are prohibited. Domestic and private expenses, for example, grocery cell phone expenses. We have fines, for example, traffic fines are prohibited. Domestic and private expense, cell phone expense are also prohibited. And also the second one is the fines, traffic fines. You'll not be allowed to deduct it. So expenses relating to employment, remember employment is trade. Form part of trade is under the definition of a trade. It qualifies as a trade. So under section 23, the 23M in the Act gives a list of expenses related to employee which are deductible. So you must check the expenses under section 23M which are deductible. Some are prohibited. This is domestic and private expenses and fines are prohibited. However, we have section 23 which gives deducted, which gives employment expenses deduction. So legal expenses relating to salary employment issues, an employee may deduct a legal cost incurred that is directly related to the salary. Example, CCMA proceeding. The employee may deduct this legal cost. The wear and tear on an asset that is used for production of income is used regularly for the job, is in production of income. This will be calculated using the cost of assets and dividing it by useful life of the asset. So you have the cost, you'll divide it by useful life, you'll get the wear and tear, and the wear and tear will be deductible. So the allowance is a portion for the number of months the asset was used in the year of assessment. SARS will only allow deduction for wear and tear on asset that the person used for earning salary income that is used in production of income. It will be a portion for the number and month of asset that used in the year of assessment. So, for example, that asset will be computer and printer. Is just an example of this one. So home office expense, those who are working from home, if the job requires a taxpayer to have a home office, the cost of relating to home will be deducted from taxable income, will be deducted from taxpayers' taxable income. This will include the rent, repair, maintenance, and other applicable expense incurred with regard to home expense, home office expense, home office. So home office expense are those who are working from home. They are required to deduct some expense, which are rent and repair and maintenance. And we also have retirement fund contribution and donation to public benefits organization. So the important cases that you need to apply when answering the deduction, the general deduction formula. So we have the CIR, you need to go through them and apply them in a question to determine whether expense qualify as a deduction or not. So we have CIR versus DPL holding. We'll talk about carrying of a trade. You need to apply this case when you answer the question on carrying of a trade. We have Jofe company, deductible of compensation payment. Remember the insurance, when I said that example of insurance, you need also to apply this case. Actually incurred, the Caltex oil. We have the other one, the expenditure that produced income in the later year of assessment is deductible, and that's sub-NACA. And we have the CIR, interest paid on loan that acquired can be deductible. And also you need to apply the Johnson one on expenditure paid in the current year. And the apportionment of the expenditure in different purposes. Remember, I talk about if there is two purposes, the other one is for where there is, yes, where an amount is both for trade and the other purposes, it will be apportioned. So it's the case study that deal with that. We have this example. This example talks about everything that I talked about today. So let's go through an example and then I'll give you a minute to complete it before we can discuss it further. So we have Jofine Pty, which is a small business corporation as defined in the income tax. Go find manufacturer GPS watches that allow parents to track their children's location. So take note, is a small business corporation as defined in the income tax. So they manufacture the GPS watches. So the company's financial year end on 31 January. So the first thing, they purchased an office building 1st of January 2023 for 880 and receive a rental of 35,000 in total from the lease. They purchased office building. They received the rental income from the lessee for the remainder of the year of assessment. So co-finder has the other one is that co-finder has a long-term plan to renovate and expand the building into a multi-story office to rent it out to their business. Commercial rental of the office is currently not part of the trade, is not currently part of the trade, remember, but they are using it to expand the business. So co-find received an invoice on the 15th of March 2023 for 158,000 from the architect for the service of drawing up a plan for multi-story offices on 10 November 2023. Co-find paid the entire amount on the two. They paid the whole amount on the two. What you are required is discuss whether the amount of 800,000 paid for the building, as well as the amount of 158,000 for the building plan qualify as a deduction in terms of general deduction formula, section 11A, right with section 23 of the income tax year of the income tax during 2024 year of assessment. You are required to support discussion with the case law principles. So what I want you to do on this question, I want you to go through this question. And then after going through the question, try to apply the general deduction formula. As I explained the general deduction formula and also the requirement. Remember, we have section 11, which is the definition of general deduction formula. We have section 11A, which specify the requirement of general deduction formula. So we also have section 23, which prohibit the deduction, certain deduction. And we have section 23M, which allows certain deduction. So I want you to apply the case law and support your discussion with the Act, which is section 11A, right, with section 11, section 11A, section 23, and section 23M. And 23C. So I want you to go through the question and answer this question so that we can apply what we learned. Remember, our learning outcome is to apply the general deduction formula to a question. So I want to show you how to answer that kind of a question. If you are given a question like this, how to answer it. So what do we have? Let me repeat the question again. We have the co-find a small business, which as defined in the income tax, they manufacture watches. Their financial year is 31 January. They purchased a building. We want to know if this building qualifies as a deduction. They purchased a building 1st of March 2023, and they receive rental income of 35 for the lease from its listing. So the other money, they receive an invoice. They receive an invoice of 15 November 2023 for 158 from Architecture for his service drawing. This expense, the first expense, they purchase a building. So we want to know if this building qualifies as a deduction. The second expense, they pay this 158 for architecture for service rendered. So we want to know if this amount of purchasing a building as well as the amount of building plans will qualify as a deduction. So you need to apply the general deduction formula. You need to apply the case law to support your answer. If you are saying it qualify as a deduction. So this question is too long. I'll give you 10 minutes to complete this question so that we can have a discussion on this question, because it will give you idea of how to answer the long question in an exam situation. So are we good? Can we do that? Okay, thank you. Let's do that. Let's answer this question. Remember, is they purchase a building. They also pay for architecture services. I want to know if these two qualify for deduction in 2024 year for assessment. So you need to apply section 11A, section 11, section 23, and section 23M. And the applicable case. So it's 9:58. We'll start at 10 past to discuss this question. We can continue. Anyone with the answer? Anyone who wants to discuss it before we go to the solution? Let's discuss the answer. So let me go through the question again. So we have co-find a small business. They manufacture watches. Their financial year end is 31 January. They purchased a building. We want to know if this building that they purchased a building of 880 on 1 March, and they received rental income of 35,000 in total. And another one, they received an invoice on 15 March for 158,000 from architecture for drawing up a they paid the entire amount on February 2024. So we have to discuss whether the 800,000 paid for building as well as the 158 for building plan. We have a building and a building plan. We want to know if they qualify as a deduction. So we need to apply section 11 with section 23 and applicable cases. So this is how we answer this kind of a question. We'll go to, so I said for you, for the amount to be deductible, you need to apply first in, first out. When you answer this kind of question, you need to go to the general deduction formula requirement that I talked about. So the general deduction formula requirement must be complied with. The amount to be deductible in terms of general deduction formula, it must comply with all the requirements of the definition, which is carrying of a trade, expenditure, and losses actually incurred during the year of assessment, not of capital nature in production of income. So you need to list this requirement in terms of section 11A. So let's test it. Carrying of a trade is co-find carrying any trade. So let's discuss it. Are they carrying any trade? Co-find manufacture and sells watches.
Yes.
Therefore, they carry a trade.
Yes.
Yes, you wanted to say something?
Yes, they're carrying on a trade.
Yeah. Sorry? Yeah, they qualify as a trade. Remember the definition of a trade? We want to know if they qualify as a trade. So they manufacture watches, therefore they carry on with a trade. they renting out a building in a commercial rent constitutes a trade. So let's go to, I want us to apply what we have learned. Let's go to the definition of a trade to see if they carry any trade. Yes, we see that they carry on a trade, but what is the definition say when they say carrying of a trade? So they're saying carrying of a trade. So in terms of section 11, remember on this level, we need to say in terms of section 11. 11A or 11, the requirement of deduction, general deduction is as follows. You need to list those requirements. And after listing the requirement on this level, remember you are 30 years. On this level, you need to also apply the carrying of a trade. So we are starting with the first one. We want to know if the business is carrying of a trade. So carrying of a trade, what does it mean to carry off a trade? So I want to apply the question to what we are learning today. So for example, for expenses to be deducted in terms of section 11, the taxpayer must be carrying off a trade. Definition of a trade include every profession, trade, business, employment, killing, occupational venture, including letting of a property. So they are letting, on this question, they are letting property, they are also in business. So they qualify as carrying of a trade. So for example, on this example, so we did mention on this level, I'm still repeating, on third year level, you need to maintain in terms of section 11A. These are the requirement of definition, the requirement for definition of general deduction formula. Remember, the question said, discuss whether the amount qualify as a deduction. So we are going to, in terms of section 11A, right with section 23. So we said in terms of section 11A, the requirement are as follows. So we are talking about carrying of a trade. I did show you how the definition of carrying of a trade. So they are in business, they trade, they are in business, and they are renting. So they carry on of a trade, they carry trade in terms of definition of a trade. So is the expenditure and losses. So let's see, the purchase of building 880 and incurred expenses of 158 for architecture plan. So we want to test the expense and losses. So we want to know if this qualifies as expense in terms of the requirement. So when we want to test the expenditure and losses, let's go back to the definition of expenditure and losses in terms of section 11A. So in terms of section 11A, the expense and losses, expense is defined as a payment in return of goods and services. The loss is expense in voluntary nature. So in this instance, the expense is a payment for return of goods and services. Yes, it qualifies as expense because they paid money for expenses and losses. So they purchased a building, they paid money for this building, and also they paid for architecture plan. Yes, it's expense and losses. Actually incurred. Is this actually incurred? Remember, we list the definition. After listing the definition, we discuss each element of the definition. We apply it to the question. Is how we apply the question to an answer. So you may remember, you must say section 11A. We talked about the carrying of a trade. I went to the definition and show you the trade, the business, rental also qualify as a trade. And then expenditure and losses, they paid money, they incurred expenses of 88 and 158 for the building and architecture plan. Yes, it's the expenditure and losses. So let's go for actually incurred. Is the 880? Remember the question was asking about the 880 and the 158 if they qualify as a deduction. So according to section 11, let's go to actually incurred. What is actually incurred? Let's go to our notes. What is actually incurred? We said actually incurred means that the taxpayer can deduct expenses that are actually have been paid as well as the amount that are owed. The liability of expenses must be unconditionally. So there must not be any event. So we did example. Let's go to our question, the solution. So we are testing actually incurred. Actually incurred is the third requirement for definition of income tax. So we are testing it if the expense were actually incurred. So the taxpayer paid 880 for the building on 1 March. Remember, we said on 1 March on the question. We said on 1 March. Remember the dates are very, very important. We said on 1 March. You will see later when I say the dates are very important. We said on 1 March they paid 880. We want to know if this 880 qualify as expense, qualify for deduction. And on 15 November 2023 is still the same year. It's March 2023, it's November 2023. They paid these expenses. So we are testing actually incurred, which is the third requirement. So the third requirement is that they paid on 1 March the 880 for the building and contracted the service of architecture on 15 March. Therefore, the expense of 158 was actually incurred. There was a legal obligation actually incurred. There is a legal obligation by co-find, even though the amount for the plan was only paid in it was only paid on 2 February 2024. Any question on actually incurred, because we have many dates on this one. They paid the 880 for the building. It was 1 March. Remember our financial year for this company, it was the financial year for them, it was in January, 31 January. And we want to determine for the tax year of 2024. So the tax year runs, so it will be the 2023 transaction until next year, 2024, February 2024. So they paid this amount on 1st of March, contracted the service on 15 November 2023. Therefore, the 158 was actually incurred. There was a legal obligation to pay the supplier, even though the amount for the plan was only paid on 2 February. So do you have any question on actually incurred? We can continue. So remember, we have after actually incurred during the year of assessment is another requirement. So we are testing this requirement. Remember on your level, which is third year, you need to apply the question to the answer. So is how we apply the question during the year of assessment. So the case law deal with actually incurred is this one of Caltex Oil, Edgar Store. So you can, or the one for it is the Caltex Oil or the Edgar Store. So you can go through the case study. So during the year of assessment, is the third requirement. Is the fourth requirement of general deduction formula under section 11A. So during the year of assessment, what was saying about during the year of assessment, both the expenses were incurred during 2024 year of assessment. So it's from 2023 to 2024. Both expenses were incurred in the year of assessment. The first expenses was incurred in 1 March 2023. The second is the 2024 year of assessment. The other one was incurred. You must be careful about the year. Remember, the financial year ends in 31 January, but year of assessment is February 2024. So the building was incurred in 1 March 2020 is still in the financial year. So the other one is 10 November. So it's still is 2023, is still under year of assessment. The building was purchased, so both the expenses were incurred in 2024 year of assessment. Remember, it's 2023 and 2023 is still 2024 year of assessment. So in production of income. So in production of income is the other requirement during the year of assessment, not of capital nature in production of income. So we'll deal with production of income in later, not of capital nature. You can swap them around or you can discuss them as like this. So in production of income, very, very important. In the production of income, let's go to the definition of production of income. I said in the production of income, when we are talking about the production of income, I said the expenses must have the purpose of producing income. So we are testing if the expenses, the 800,000 and the 158,000, they are for the purpose of producing income. So the test deal with whether expenses, the 800,000 and the 158 are closely linked to the activity that produced income that will be taxed. So again, there are court cases that you can go through them. This one of electricity deal with expenditure must be so connected close to the link, means that it must be closely connected or closely linked to the activity of producing income that are taxed. So in our question, we have the 150, the 800,000 and 158. Are they closely linked to the activities? So let's see if they are closely linked to the activities. So in production of income. So the building was purchased as a rent producing building. The building is currently producing rent. Is therefore the building was purchased for rent producing building. The building was purchased to produce building. The building is currently producing rent. So we read in the question, they said they bought this building and they receive rental income. So it's closely linked to the operating income because they are receiving rent on that. Let's check the building plan. The cost of the plan related directly to the building. The building is used in production of income. So we saw they say the plan. Let's go to the question. The question is saying we test the 880 is linked to the producing of income, which is the rental, and then we go to the drawing. They're building the multi-story office building. So is it closely? Yes, it's related to the building. The building is used for production of income, not of capital nature. Let's test the last requirement, not of capital nature. Let's go to the definition of not of capital nature. What we said about not of capital nature, I said the capital expenditure is not deductible if it's not deductible in terms of general deduction formula, capital nature. If there is of capital nature, it's not deductible. If it's of revenue nature, it's deductible. Remember that the result of the factor will give indication only whether the amount is of capital nature or not. So let's go to the question to see if it's of capital nature, it's not deductible, or if it's of revenue nature, is deductible. So how we apply it, this is the requirement in terms of section 11A, not of capital nature.
Maite,
So we are
sorry to
saying,
disturb.
sorry,
There's a hand, Zintle.
someone. Zintle?
Good morning.
Good morning.
Ma'am, I just wanted to find out that for each requirement, are we supposed to refer it to the case laws for each requirement?
Yes. Yes.
Oh, okay.
You'll be yes, on this level you need to refer to the case law.
Okay. Thank you.
And also you need to specify the section in terms of section 11. We saw, I talked about the requirement. I said the requirement in terms of section 11A. These are the requirements, and how you apply them is how you apply them here. So we are still talking about not in of capital nature. The building was purchased as a long-term investment or to be used to expand the business. It will create undoing benefit, therefore, is of capital in nature. The building is of capital in nature because it was purchased for long investment to be used to expand the business. So it will create undoing benefit, therefore it's of capital nature. Let's go to the plans. Remember, we are testing if those two were of capital nature, where the 158 and the 800,000, the purchase of a plan and purchase of the payment to architecture, they are deductible expenses. So the plan, the cost of building the plan for expanding the business, it will create undoing benefits. So therefore, create an undoing benefit. So also is of capital nature. So go to this case law, go through this case law and you'll see. So we have the conclusion. Remember, when you answer this question, you must list the requirement in section or in terms of section 11A. And after listing the requirement, you need to apply the requirement. I did apply each and every requirement. The 6 requirements, I applied them to the question. So we have the conclusion. So we have the introduction, which is the requirement in terms of section 11A. Remember to say in terms of section 11A of the income tax. So application, this is the introduction, this is the application. I applied each of the requirements. So all the requirements, remember on the first slide, I said all the requirements must be met before we can deduct expense in terms of section 11A. So we tested all the requirements, but the last one was of capital in nature. So one of the requirements, the building will not qualify as a deduction in terms of general deduction formula, in terms of section 11 of the income tax. Therefore, will not qualify because it's of capital nature. The building will not qualify. The building is of capital nature. Building expenses. Remember, the question was asking us if this qualify for deduction in terms of section 11A. So the conclusion, we have the introduction, we have the application, we are testing each requirement, and after testing the requirement, we come to the conclusion because one of the requirements does not met, it didn't meet one of the requirements, which is capital in nature. So the conclusion is that the building, the 800,000 will not qualify as a deduction in terms of general deduction formula, section 11 of the income tax. The building is in capital nature. The cost of the building, the second requirement, remember, we were asked 2 questions. If this 880, sorry, I keep on saying 880, and the question was asking us if the 800,000 and the 158 qualify as a deduction. So the conclusion, we are saying the 800 doesn't qualify as a deduction, the building that we purchased. The other one is the cost of building plan are for expanding the building and will therefore create undoing benefit. It will also not qualify as a deduction. Conclusion, the cost of the building does not qualify as a deduction in terms of general deduction formula, as the expenditure is of capital nature. Remember, it met all the requirements until the last one, receipt of capital nature. If it was of a revenue nature, it was going to qualify as a deduction. Now, in terms of section 11A, it does not qualify as a deduction because it's of capital nature. So let's discuss this answer again. Any question on this answer? Because you need to be able to apply it and also refer to the cases and also have the conclusion. You need to have the introduction, which is the definition of general deduction formula. You need to say carrying of a trade, expenditure and losses actually incurred during the year of assessment in production of income, not of capital nature. Then you must apply this requirement. I applied all the requirements, but all the requirements were met until the last one, not of capital nature. So we concluded that it will not qualify in terms of section 11 of the in terms of section 11, the general deduction formula. So the other thing that I want to emphasize is the case law. Go through this question, this case law, and be able to apply to support your answer. So any question on this one? Let's talk about it before I can wrap up.
Okay, ma'am. I just wanted to find out that if it fails one requirement, then it does not qualify, or just specifically the last one.
No, all the requirements. Let's say it was not expenditure.
Okay.
It will not qualify.
All right. So
In this
if it
instance,
fails,
it's only,
all the requirements.
it must meet all the requirements. Remember on the first slide, I said all the requirements must be met before we can deduct it. So if it doesn't meet one of the requirements, fail, total fail is not a deduction. It doesn't qualify for section 11A. All the requirements must be met.
Okay, thank you.
I just and I'm just maybe thinking out loud as I'm processing. So essentially anything that is so I'm just looking at the purchase of the building, right?
Yes.
We said it's capital in nature.
Yes.
And then so any transactions linked to the item that is capital in nature, because they contribute towards the enduring benefits of that of the original transaction, would almost automatically then be also kind of disqualified or not qualify as part of the general deduction formula. Is my thinking like along the right lines? Because I'm assuming if the building had been purchased, let's say as a where they would run their operations as their headquarters, there was no rental income that would have been generated, then the payment of the architecture plans would have been deductible.
Yes.
Okay.
Yes.
Okay, thank you.
Yes, this capital in nature, I'll go through it again. Mrs. Dreyer?
Okay, so I just wanted to ask, because when I was looking at the example and doing it, I was trying to do it as a calculation, not as a long question. I just want to see where in the question it indicates, is it because it says discuss the requirements that it became a long question instead of a calculation? I'm a bit unsure of that, because I was trying to do it as a calculations instead of each of the points that falls under the section 11.
So remember the question is saying discuss. If it
So
was
that,
saying calculate the amount.
okay, so that's where
No, it's
I
saying
got it
discuss.
wrong. Okay,
Yeah,
perfect. Okay, so discuss
Yeah, you
meaning,
must be
okay,
careful.
points out the section and then apply it to each of the requirements. Okay, perfect. And then I just
Yes.
wanted to ask, on your solution, you only went for section 11, but we didn't look at the requirements for section 23. So if it disqualifies because of the capital in nature, does that mean you don't go to the next section then? So you don't discuss those points?
Yes, a good question. Remember, we can't just say on the question will not give you if we say section 11A, you will only deal with section 11A. But we want to at least to stretch your mind by saying with section 23. But if you can read the question carefully, it only talks about the trade. There is a trade. and there's no employment. Remember, Section 23 is talking about the salaried people, the salary
Oh, is that
taxpayer.
only applicable to salaries? Oh, okay. All
Yes.
right. I understand. I understand.
Yes. And
Okay, so
we
that
can't
actually
think of Section 23.
disqualifies
Yeah.
23 completely.
Yes. So
Okay,
we
thank
can't
you.
just say go to Section 11. We want to test your knowledge whether, remember when I gave you this question, I said, I want to test if what we have learned, you can apply it. So we can't just say, if it was an individual, Section 23 was going to kick on. Remember, this is a company, is a trade, is a business.
Okay,
So
no,
if
that
it
makes
was
sense to me because I was
individual,
racking my brain
yeah.
trying to figure out how 23 was applicable to the question and I couldn't figure it out. So that makes a lot more sense. Thank you so much. Appreciate it.
Okay. A good question. That is a good question. When you say discuss, you can. When you see some of us, when we see calculation, we go to calculation. When you see amount, you go straight to calculation. But you must read the question. It says discuss, apply general deduction formula. So we want to test if I talked about general deduction formula, and I also talked about Section 23. Remember the difference. I want to align the difference between these two sections, the Section 11 and 23. Remember on Section 23, let's talk about the trade. I talked about the trade. I said the trade, the first requirement is the trade. So I said under the trade, the trade definition includes every profession, trade, business, employment, and occupation. So under the trade, under that question we were doing, it goes to the business. Under trade, it will be the business. So under Section 23, we also talked about Section 23, the negative and the positive of general deduction formula. So under Section 23, we were talking about the general deduction is more applicable to taxpayer who own the business. This is because the restriction placed on the salary taxpayer. So under Section 23M, you will see that there is a deduction applicable to salaried people. So let's discuss any other question.
I saw that when we were discussing in the beginning, it was 800,000, and then afterwards it was 880,000. So ask.
Is an error.
Okay.
Sorry, is an error. It's 800.
Okay, thank you.
But all in all, do you understand the last one, the last requirement of capital in nature? Because it's the only requirement that was not met to make it not deductible. Are we good
Do you
with
mind?
not of capital nature?
Sorry about that. Do you mind just going through it again? Especially
The
for the
what?
part,
The suggested.
yeah, the not of a capital nature.
Let me go through the theory and then apply it. Not of capital nature is not that easy. You need to also check it's not straightforward like the other requirements. So not of capital nature, what does it mean? It means that the capital expenditure is not deductible in terms of general deduction formula. That one we are okay with it. If the thing is of capital nature, it's not deductible. If it's of revenue nature, it will be deductible. You must know how to apply the factor that the court has laid down to assist. So as I said, on your level, you need to understand the court cases. You need to link the court cases to, you need to apply the court cases to the question so that you can decide whether it's of capital nature or of a revenue nature. And also remember, the result of the factor will give indication only of whether the amount is of capital nature or not. So what is the true nature of the transaction? So you must ask this question before you can decide whether it's of capital nature or of a revenue nature. How closely connected is the expense of income earning operation of the income earning structure? Does the expense create asset or advance with the enduring benefit? On this question, does those expenses, the purchasing of the building and the other one, the architecture, create an asset or advance it to enduring benefit? Enduring benefit. Does the expense ratio to fixed or floating capital? What is the expenditure? What is the nature of the business being carried on? If expenses of capital nature, it will not be deducted. So let's go to the question. So we got the theory, let's go to the question. So they purchased the building as well as the plan. They purchased the building. They purchased the building, but they purchased the building on 1 March and receive a rental in total of its lease and remainder of the year of the asset. Does it create enduring benefit? The building was, let's take the question. We are saying the building was purchased as a long-term investment. They're saying that it was purchased for a long-term investment or to be used to expand a business. So it will create an undoing benefit, therefore it's of capital nature. If it's creating an undoing benefit, it will be of capital nature. Also, it goes with the plan. So you need to go through this case law. Next time I'll show you how to apply the case law on the question, but I think we have example where we apply the case law to the example, to the question. Let me go through it again. We were testing in production of income. So what you need to do, the question is the theory under production of income. It says the expenses must have the purpose of producing income. The test deal with whether the expense, so we are testing whether the expense are closely linked to the activity of producing income that will be taxed. So this court case, how to apply the court case on that? You must say the court held that you are supporting whether is deducted or not deducted. So the court held that in order to be deductible, expenditure must be closely connected. So the act is saying the expense must be closely linked. So you are testing, you are supporting your answer with the court case. You are saying under the conclusion was that the expenditure must be closely linked to the cost of performing income. So it's how you apply court case. In this situation, you must have the court case that this court case, it will support the undoing benefit. So I didn't, if you go through this court case, you will see how how to support the of capital nature. So I didn't summarize it. Next time I'll summarize all the cases to show you how you apply the cases to the question.
Maite, there's a Teboho's hand that is up.
Teboho?
Maite, thank you, Cynthia. I went through all these case laws, and I think the more I read them, the more I get confused. Unless when I have to decide on this, I have to choose one against the other to support what I'm trying to say. Because when I look at the nature of business carried on, where there's rent, mines versus CIR.
Which court case?
The rent mines.
Sorry?
Rent mines.
Is on this list.
No, it's not on this list, but it's on not of a capital nature.
Okay,
so
okay, I understand.
It's on not of a capital nature, and as well as which one is this one? The TAC versus CIR. This one is also halfway house between capital and income. And the reason why I get confused because of these two cases is what is the name of this company? Go Find. They specifically deal with manufacturing watches, but then they acquired this building to get rental income. It's not what they normally do, but this is a different kind of business. They bought the building to actually earn income on this building. So the enduring benefit, it's really confusing me. I don't know, when does this apply and when does it not apply? Because for me, I was gonna say it is not of a capital nature because they bought specifically for rental income and not on the day-to-day business that they normally do. For me to say it was of a capital nature, it was when if they buy the building, the case laws that I was reading are not listed on your list.
Yes.
So I'm saying for that, because I read these two cases, for me now to
Which
say,
cases did you read?
I read the one for the rand mines.
You said it's not on the list.
On your list, but they are in the textbook.
Okay. Is there any conclusion, like when you apply the court case, you need to see the conclusion, what was concluded on the case?
Yeah, you see, this one is what they are talking, the expenditure was more closely linked to the income than income earning operations of the taxpayer. Is capital nature.
Yes. The conclusion there, I'm struggling to hear you, but I'm trying.
You
said
Okay, because maybe it's a network problem, then I'm just wasting time. So I'll go through these cases. Maybe I'll understand it better because we're gonna go back and forth and with just one question. It's fine. I will see how to deal with this one. Maybe
you can put it on the chat.
The cases. Okay, all right.
By the way, we've got Marion and Zintle. Two hands.
Marion and Zintle.
That order.
Yeah, sorry. I think what Tebako was trying to say is that from her perspective, because Go Find manufactures watches, GPS watches, the purchase of the building would not then be capital in nature because it has nothing to do, I think, with the core operations of the business. So I think she disqualified it being capital in nature and therefore saw it as something that would then become
revenue in nature.
Yes, revenue in nature. So I think that's what she was trying to say for quite a while, is that I think she looked at the Rand Water case, and then made her deduction from that. Because I think what we just need clarification is that if Go Find does GPS watches, but because they purchase anything, anything else that they would purchase that brings income or revenue, regardless of where regardless of whether it forms part of the core functions of the business, as long as it's going to bring them income as a business person, the building now belongs to Go Find. It would still then be something that is capital in nature because they are the purchasers of it and they are going to enjoy the enduring benefits of the building as Go Find.
Oh, okay. But they are selling watches, therefore they are carrying on a trade.
Yes.
And also they are renting out the building. Is the commercial rent and constituted trade. They are doing, maybe she only focused on selling watches. They are also renting. Remember I said rental on the definition of trade does qualify as a trade.
Yes. Yeah, thank you.
So maybe, okay. The other question?
Okay, thank you. I think I've got it, thanks.
Okay, all right, thank you. Remember on this question, you don't dwell only on the manufacturing and selling of watches. They also rent out the building to the other income they generate it from renting of the building. So the expenses relating to renting of the building, they bought a building and they rent it out. So they have the building, which gives them rental income. And on a trade, on the definition of trade, the rental is also the business, is also qualified under business. You see, including the under definition of a trade, it also including letting of any property. So the definition also includes rental income. So under section 11, under definition of a trade, the letting of any property, they are also renting a property. So it will qualify as a trade. So maybe she's confused because they are also selling watches. They also doing everything related to the building. Expenses that are incurred, it will qualify as a deduction if it was of revenue in nature. I'm not sure if you are getting me. And for the
Yes,
case to apply the
I
case,
get
you
it.
need to see that. Okay, all right, thanks so
I get it.
much.
Thank you. Thanks.
On the next one, I think we are doing capital allowance. I'll also show you how to apply the case, how to take the conclusion from the case and apply it in the question. Okay, let me wrap up. Today we discussed the general deduction formula, and then we talked about the definition, which I said is important to apply it in a practical way. The definition in terms of section 11 and the 11A gives us the requirement. The requirement are expenses. This is the Bible, you need to know it. It's expenditure and losses actually incurred in the production of income, provided the losses are not of capital nature in the year of assessment. So the requirement, you need to know the requirement and the definition. You need to apply the case law. We talked about definition of a trade. Remember, it's every profession, trade, business, employment. Employment also deal with section 23, calling, and then we also saw that we have salary, it will be in the trade, and rental also, but exclude the passive income, which is the interest and dividends income, which are exempt. So we have the trade also, the relevant cases. The relevant case that you can support your answer with is Beggars versus CIR under the trade. And then we have the general deduction formula. We said we have the positive and the negative. The positive, you need to apply both of them, the negative and the positive. We said that the positive, which is an expense with which an expense must comply with under general deduction formula. And section 23 is the negative test, which disqualifies prohibit deduction from being deducted. So we had an example of a loss where we disqualify deduction in terms of section 23 test, 23C of the income tax, which is the negative test, and the positive test where the general deduction formula was complied with. And we have the salaried taxpayer. Remember the question that I gave you, it was a company, it was not a salaried taxpayer. If it was a salaried taxpayer, will apply section 23M. We said if there's no value, there was an exchange or inheritance, we'll do in a market value. We'll use the market value. So it's 11 o'clock. Any question or any comment? Thank you. Thank you for today. We'll see each other on Tuesday for capital allowance.